According to the Reserve Bank, companies taking on more loans account for the jump in private credit extension. Household demand for credit was flat as consumers remain vulnerable thanks to debt levels outstripping disposable income and gloomy economic prospects. The National Credit Regulator data shows total value of new credit granted in the second quarter increased by 7%, made up mostly by secured credit dominated by vehicle finance. Economists say corporate credit appetite could be indicative of cash flow pressures.
What you're probably seeing in this month's number more than anything is just a cash management issue. What we'd like to see is that the rise in demand from corporates for credit is associated with growing capital expenditure, and that is, in other words, expanding capacity. That would be a very positive move, which could be indicative of a more virtuous cycle developing, but we're not seeing that at this point in time.
Banks are also becoming wary of extending credit to new clients.
The CBM figures indicate that there's been very marginal growth in terms of what new credit active consumers that have actually entered the base. So we can only assume, based on the figures that we see, that the growth in mortgage and vehicle finance credit has actually come from the existing customer base.
Credit active consumers have increased, and so has the number of those with impaired records. Those in good standing also decreased by 1% compared to last year. Gloria Stefako, SABC News, Johannesburg.